Do you see any changes in the political world, and do you see any influence to real
The
estate?
tariffs are in the news and things are changing almost on a daily basis. Interest rates, like there's a lot of uncertainty with interest rates. Everyone's wanting them to go down just a little bit more. You can try to wait, but eventually, like, you're going to miss your window. But that's how real estate is.
Hello, everyone, and welcome back to the Path of Progress. I'm your host, Alex Kononov, and today, guest has a powerful example of what it means to live with purpose, build strategically, and give back along the way. Joining me is Ron Angel, a U.S. military veteran, former tech industry leader, and now a full-time real estate investor and a founder of DivZero Capital. With over a decade in the investment space, Ron brings a unique approach that blends personal development, financial freedom, and community impact. Ron, welcome to the show.
Thanks so much, Alex. Awesome to be here.
It's a pleasure. First of all, thank you for your service. Listen, you've had quite a path from the military to tech and now into real estate. Can you walk us through the journey?
Yeah, absolutely. So as I think about my journey, from military to military to tech to real estate, at each step along the way, there was sort of the call to adventure. So to go back after high school, I went to college at the University of Maryland for about a year and a half, and there my roommate, he had joined the U.S. Army. He was in the reserves, and after like the first summer, after the first year, he came back and told me what he was doing. Right, he was going out and training, doing like nuclear, biological, chemical training where they're wearing all the gear and doing all kinds of cool stuff. And so for me, that got me excited and thinking about joining the military myself. So that was like the first call to adventure. So I did another semester in college, and after that, I dropped out and joined the U.S. Army. I enlisted as I was a private. I kind of came in ground floor, you can say, and so that was my foray into the military. After joining, my long-term goal was eventually to become a commissioned officer and go career. I had these grandiose plans and goals of becoming a colonel one day and, leading a brigade and so on and so forth. But after about 3.5, close to 4 years, I kind of, and I don't remember exactly what caused it. In fact, I don't think it was anything specific, maybe just a spark of a single thought. But I got this feeling like, actually, I want to do something else. I want to go off into the civilian world and just start over, start doing something new. So that was the call to adventure the second time. So after that, I did not re-enlist. I finished off my tour of service. I did almost 5 years active duty in the Army. Got out, went back to college. Actually, I went and finished my degree in computer science, and then joined the tech industry. So, and tech was a lot of fun. Just a lot. It's a real creative outlet for, I was a software engineer, so I was able to build stuff, design stuff, collaborate with team members to solve like real world problems for customers. The company I worked for, I was there for almost 10 years, my very first job, and kind of promoted up, went through the whole, the corporate life cycle, getting promotions and all that stuff, starting as a junior engineer, eventually becoming a lead, then a manager. I did other roles, software architect, product manager, things like that. Later on, left and joined another company called ADP. And I was there for about 4 years. And that was a big promotion. I went and took a director of software engineering role and did that for about 4 years until I got another call to adventure. And so that was, I think it was pre-COVID. I started to think about doing some, investing in real estate and stuff like that. Started to dabble in it a little bit. And then it was during COVID that I realized I actually wanted to get out of the rat race and go into business full time, go into real estate full time. And that was the next call to adventure, which I eventually did. I gave notice and left this, great career where I was progressing and went into real estate full time.
I like how your curiosity led you to another path. And you always gladly took it and just move forward with it.
Yeah.
It takes a lot of bravery to change something that you know what you do and, hey, try something new. So what was the aha moment for you that you decided real estate is a real thing? Tell us about it.
Yeah. So I had dabbled in it before. So after I got out of the military, I actually met my wife in the military. So she was still in the Army when I got out of the service. And we got stationed, we met in South Korea. That's where my duty station was. I was there for 4 years. And she got stationed at Fort Stewart in Georgia. And we bought our first house. And from having talked to other soldiers who were in the military for a long time, what typically happens, or what a lot of people do, is as they move from duty station to duty station, because that can, typically every 2 to 4 years you're moving, they would buy a house, leave it behind when they move, rent it out, and then buy another one, and so on, and kind of collect a small real estate portfolio that they then use to leverage for their retirement. So I knew that that was a strategy. And that when we bought a house in Fort Stewart, there's a town called Hinesville right outside the base, the intent was always to eventually turn it to a rental and then to build up a portfolio and go from there. So we bought that. My wife, this was back in 2007, 2008. She got deployed to Iraq. So she was still in. And I left and we rented the house out. After she came back about a year, almost a year and a half later, it was a very long tour. We bought another house in the same town, rented it, even after moving. She got out of the military. We came when she was deployed. I was living in Long Island, New York. I went back to live with my parents, and so when she got back, she came up, and we bought a house here on Long Island. And so we had those two rental properties. So we had those for a very long time. And at the time that we bought them, I didn't really know too much about real estate. I didn't know how to analyze deals and how to make sure that they were cash flowing and all that stuff. I just kind of thought, hey, if the rent is around or a little bit more than the mortgage, then I'm looking good and things are great. But I kind of always knew that real estate was a good vehicle. We just didn't continue to build a portfolio after those first two.
I like it. And listen, you naturally progressed to that role of real estate investor, real estate owner. And for you, organically, you started from buying your own house just to live there, right? And naturally, after you move out, you rented it like all your folks in military that you met before. So what was those houses? As they were ready, move-in ready houses, like, first time home buyer kind of thing? Or did you do any fixer-upper there?
Yeah, they were first-time home buyer, but in a newer neighborhood outside the base. I think the house was built in, I don't know, the late 90s or early 2000s. And when we moved in, it was 2006, so 2007. So they were a relatively new house, not that old, didn't need a lot of work. The house we moved into and we lived in, we did do a little bit of fixing up. We redid the floors. We installed an irrigation system in the back, but that's because we were living there. It didn't, strictly speaking, it could have been rent ready without a whole lot of work. We painted it to our liking and all that stuff. The second house we bought was right around the block, so it was also in great shape. There was the original owners were living there. They had done some work to the house, so it didn't need a whole lot of anything. So I don't recall us doing anything to fix it up. Maybe just we cleaned it out and put it listed it for rent.
So how did your experience change when you went from military to corporate? Did your approach for real estate change during this time? Have you become more analytical about properties?
Not really. So when I moved into corporate, I kind of went along in my career and didn't think too much about it. Like I said, I didn't continue to build a portfolio. It was just kind of there. I think part of it was I got distracted by my corporate career and, getting promotions and just doing well and all that stuff. I didn't think too much about the investing. I had 401k and IRAs and all that stuff. So we were investing for our retirement that way. And, it was all kind of part of the overall portfolio of assets that we had. So a lot of it was really in the stock market, and I didn't put a lot of attention on the real estate. So it was kind of parked there for a long time.
Sure. And at what time you decided to completely go 100% from corporate to real estate? Because, like everyone's saying, golden handcuffs, you kind of hook to this job, you hook to this paycheck, and you're paying your bills and you live in your comfortable life. When was it changed and how did it happen to you?
It's such a great point. So it happened during COVID. This was in late 2020 where I started to think a lot about this. I read a book called, The 4-Hour Work Week. Yeah. And that got me thinking about, okay, how can I build a life around almost minimal work or doing enough work just to sustain my standard of living, or what standard of living I wanted to build or to have, and be able to free the rest of my time up. So what would that look like? And I realized I had to go into business to do that. I couldn't do that as a full-time W-2 employee with like demands from higher leadership to, continue to get promotions and work 60 hours a week and all that stuff. So I realized I had to leave the rat race, as we like to say, and go into business for myself. And real estate was kind of the natural vehicle. I'd always known about it. I had been doing a little bit of other real estate investment outside of those two houses that I owned. I invested in a couple of, I guess you can call them syndications. There were really partnerships where we were flipping some homes. So I had a little bit of money in those, got some returns, nothing to get excited about. So I realized
More
I
like,
had to go off.
it's more like a joint venture, but you already
Yeah,
tried your experience in those and as a kind of in real estate investing, and this helped you to see everything besides just boring multifamily rent, long term rental. Now you
exactly.
dubbing into to the flipping side, and not only from the side of flipper, but you going casually and trying your way through investment where you're supplying money and you trying this way to see from the sidelines how the process works and you learn from this pub. I do like your approach
Yeah.
about it. Tell us more about it and how did it craft how you see the future in real estate after that?
Yeah, so those partnerships, those JVs, basically we had an operator that was like the managing member of the LLC. We were going property by property. This was in, I want to say Flushing, was it? It was in Queens somewhere. I can't even recall the specific locations. There was a like a recent zoning change in those neighborhoods where you were able to take single family homes and convert them into two families. So the strategy was they were basically door knocking, finding owners who've been there forever and wanted to sell. They would sell the house, and we would buy the houses, we would pool money together, buy them, tear them down, and build brand new two family homes. And we were able to sell them for about twice what we bought the house for after putting in maybe $500,000. So let's say we pool about a million, 2 million, five, end up selling around 2.1 million. The managing partners would get, we would get a preferred return as the limited partners or as the kind of the non-managing members. The target return was like 10%. And that wasn't 10% per annum. It was 10% on capital. If it went a year and a half, like let's just say the returns were underwhelming. And then the managing members would basically share after a 10% preferred return, kind of $1 to $1.
I just want to clarify, you didn't
Yeah,
go to flipping though, right? I misspoke. You went right to the development part and
I
you
guess
just
so, but
you
but it was as a passive investor, right? So I can't say that I took on anything more challenging other than moving money around, wiring it at the right time, and then getting my updates once a month. What was going on.
but were you interested in the process? Have you tried to learn the process along the
I
way?
did, and in fact, that's kind of how I got into it. So I knew of this investor. He was doing a lot of stuff. He wasn't just doing these two family new construction deals. He was doing larger. I guess you can say small to mid-ish apartment buildings in the city. But we're talking about the sums of money that he was playing with. We're talking multiple millions. So pretty decent sized investor. I met him through my mom. He actually owned one of the companies that my mom used to work for as a bookkeeper. And when I was wanting to get into other things related to real estate, I was asking people, and my mom told me about him and how he does real estate, and you should meet this guy. So I went out and met him in his office in Queens, and we talked a little bit. And I said, like, I want to learn, like, help me. What can I do to add value? What can I do to contribute? And that's when he told me about these JVs that he was doing. And so it was kind of a vehicle for me to get my foot in the door, build some relationships, learn the process, and so on.
I like it. I think it's important point to our listeners that networking is a key. If you want to progress in the space, you have to ask around. Until you ask question, if someone knows about real estate, no one will answer you. But most likely from your immediate circles, mom was in your case, and she pointed you to the right direction. And now you were
Absolutely.
talking to the key point principals there who was doing those deals on a daily basis and who was focused on that kind of assets. But can you tell us, was it during your corporate or after the corporate work?
This was during corporate. So I was still actively, working full time, 50, 60 hours a week in the city and, doing this kind of passively on the side.
Love it. So tell us a little bit more about your transition from corporate to straight to real estate full time. Did you prepare yourself for that? Did you give yourself some timeline to be ready to move on to the next stage of your life, or you just jump into it?
For sure. And I'll preface this with I don't recommend the way that I go about it. The way that I did it. No, I could we could definitely leave that in here because if I could go back, I would probably do a little bit differently.
For sure.
So what I did again, it was about the call to adventure. So I got this call to adventure. I wanted to go and do this full time. This was during COVID, right? So it was, everyone was in isolation. Everyone was working from home. I eliminated my commute. So I used to commute an hour and a half each way from Long Island to Manhattan for my job. And so that was no longer there. And so I was able to spend a lot more time with the family. I didn't have as much time away from them. And I kind of started to like that. It got me to think and realize more about why I was doing this, even though I was always telling myself that I'm working hard and trying to get promotions and bonuses and equity. for my family, to build, to give us a nicer standard of living, to save for retirement. But ultimately, where I was investing my time and energy didn't reflect what I was saying my values really were. And so that was a period of time where I think a lot of people kind of made some realizations, and myself certainly included, about I want to change things a little bit. And so that was right around the time I read the 4 Hour Work Week, and I realized that something needs to change. And so my original plan was, as I was thinking about it, was I wanted to start investing a lot more time in real estate and building up a portfolio and getting some passive income to eventually be able to leave my job and still have the standard of living, or at least enough to where I can make the transition. And I was thinking about a 5-year timeline, right? Like, to build that up. And as I was, continuing to network and learn more and get more excited about it, I started to look for ways to how can I cut down that timeline as much as possible. And so 5 years turned into, okay, let's do this in 2 years, to 18 months. And then eventually I realized, like, hey, by the end of the year, I want out. And this is by the end of 2021. So I think it was probably April or so of 2021, I realized, hey, by the end of 2021, I want to go do this full time. And so at that point, it wasn't a question of what I wanted to do or by when, but how. So I just had to solve the how problem. And I realized that to solve the how problem, I couldn't do it with passive income. I mean, I didn't know of a way to build up, 100K a year in passive income to be able to place enough of my income to where it would make sense. I needed to generate active income. And so that's when I started to get to work on how can I make a transition where by the end of this year, I can step into a business that I can make a year minimum actively, at least in the first year, to kind of start replacing my income. So that at that point, that was the problem that needed to be solved.
You did prepare for it. So you did have some plan. You just didn't jump to it. So you had some thought process behind it.
Yes, for sure. But the thing is that I did not build up the business enough prior to leaving to where I was stepping into something that was already at least making some money and was consistent. So if I could go back and do it again, I basically started to build the business the last couple of months before my exit from corporate America, right? I started to go into wholesaling. And so I started marketing, I started talking to sellers, doing all that stuff, but I hadn't closed a single deal prior to leaving my corporate job. I was like, I'll just figure this out. I'll make this work. Now, granted, I set aside a lot of runway room for the business and for my personal finances so that I could pay the mortgage and buy groceries and all that. But still, it was like, hey, like, I need to make this work, or, this is going to be a problem. So, if I can go back and do it again, I would definitely have spent maybe 6-9 months building up the business, making sure that I can close deals, some money's coming in, the business is making money, before going in and saying, okay, let me scale this and go after this a lot harder.
Yeah, but it also gives you a fire, right? Under you.
Oh my God,
you don't have another option. You don't have a way out. So you have to focus 100% on this, and you have 200%. You just keep pushing until you make it done. If you had a job on the sideline, maybe you would look back at that safety and say, what did I do? Why do I go spend my time? I want to spend the rest with my family at my day off. I don't want to think about it. So there is 100%. Saying about it, like, you jump and then you build your parachute on the way down. Yeah. This is exactly what you did here. And I admire that. It take a lot of, stamina to go through this process. And tell us, how did you survive this time? And when was the first proof of concept here for you that you said, okay, I made the right choice?
Well, here's the deal. Hindsight's 2020. So if after that first year I had built my business and I was making money and everything was good, I can think back at the decision and think to myself, oh, I'm a genius, right? But it didn't work out that way. So 2022 was kind of a rough year to go into real estate. It was a rough year to go into wholesaling and or flipping. And that was because interest rates, inflation started to rise, and then the Fed raised interest rates. A lot of buyers left the market. It became a lot more of a buyer's market. It was a lot harder to sell properties. Sellers that I was reaching out to, to wholesale their properties, weren't really caught up with where values really were. My buyers kind of left the market. So the first few months were great. I was getting contracts, selling them. I made a good amount of money. I started hiring. I hired an acquisition manager, a disposition manager, cold callers, a lead manager, all the things. I had a team of 6. I mean, this is something you can make a 7-figure company out of, easily in this industry with that size team. But then all the deals dried up. I couldn't disposition any of my contracts past June or July. I think maybe I closed another deal in August or something. But after that, I just couldn't move anything. So I had to terminate most of my cold callers. I had to let my acquisition manager go, my dispo manager go. I went back down to a team of three, basically myself, my virtual assistant, and a lead manager. Or sorry, my cold caller. I even had to let go my lead manager. So by the end of the year, having scaled too quickly, I made $200,000 that first year, which is great. But I spent $200,000 on marketing and all the salaries and all that stuff. So basically broke even for the first year for all that effort.
Easy, but you were focused on the growth, right? At the first
Focused
stage,
on the growth.
everything is going well, and you like think, okay, I'm unstoppable. Let me just keep fueling the operation, and then market pivots, and we are not ready there. As most seasoned investors, we're kind of ready, but market is strange, so no one really knows what's going to happen tomorrow. We can only, like you said, hindsight 2020. So what was the next? How did you survive through this, little step back for you? You understand this and it's harder than you thought about it. And what did you do after that?
Yeah, I mean, at that point it was around, so I did some pivoting. The market I initially started with was Raleigh and Durham in North Carolina, right? So very competitive market. So I started expanding out to some of the secondary, tertiary markets around there where there was a little bit less, well, significantly less competition from other wholesalers and flippers, so that it would be easier to get contracts, easier to disposition them. So I did a bit of that. I also focused on cost cutting and like really getting a solid handle on my numbers, KPIs, expenses, all that stuff. I also had some additional income, another income stream from private lending, because along the way, I also was doing a lot of private lending with some of my own capital, and all that. So that helped me kind of stabilize. I took a couple of consulting jobs to produce a little bit of income as well. So I kind of made it work. I also pivoted temporarily towards multifamily. So I joined a multifamily mastermind thinking, hey, let me just kind of get out of the single family world. Let me try this other thing. And along the way, I started a couple of partnerships, flipping partnerships with people in a couple different markets where I was coming in as a capital partner and systems and processes. And there were the operators, the boots on the ground. And so I started to build a couple of businesses in partnership on that to build this out. So I basically left wholesaling because it's not something I was enjoying or really was particularly good at. Like I made it work, but it was very draining. So I pivoted to flipping houses, basically, is what I did.
Yes, but utilizing your capital and someone else was working on the project. So you partner up this key person in that market. And this is how DivZero Capital was born, right? This is your company that
DivZero is the company I formed before I left corporate America. So that was meant to be a holding company. And so all of my subsidiaries are under DivZero. So under DivZero, I have RNA acquisitions in Michigan. I have R&D Capital in North Carolina. I have DivZero Holdings in Florida. These are for some different activities across different markets. I also had Present Day Properties, which was my wholesaling company, which I've since wound down. But DivZero is kind of the holding company. And so now my business basically looks like this. So I have primarily my flipping company in North Carolina that I work on with my partner, Dwan Elam. I do a fair amount of consulting I do a couple different types of consulting, some for actually one of my old tech companies as another income stream to help me give some consistent income, because in flipping, like you'll get a check once every month, once every couple of months. And they're like nice checks and all, but the consistency, like having separate stream of income to like consistently drop money in the bank is very good. It helps me sleep better at night, certainly. And so, so I have a couple different consulting engagements. I do some coaching as well, real estate consulting, mindset, performance coaching, that kind of stuff. Very small part of my business. I only work with a few exclusive clients that have kind of been with me for a couple of years. And then like a lot of my focus is on the flipping company in North Carolina.
So your main focus is on flipping right now.
Correct.
So tell us more about it. How big of a scale of your operation right now? How many projects you looking to take on this year?
So this year, I think I was just talking to my partner the other day. I think we'll finish anywhere between 12 to 15 projects this year. I think pretty conservatively. We've already closed a couple. We have was it 1, 2? Yeah, we have 2 under contract to sell. One of those was supposed to close tomorrow. It's not going to. It's going to get delayed till next week. But that's how real estate is. We have another one more we just brought to market this week. Another is going to go on the market next week. So we have some really good momentum. We have actually very excited about this one. We just bought our first new construction. So We bought a house in Durham, and we're tearing it down. We're going to build a brand new house there. So we're very excited about that one. That'll be the first. So I have another person I partnered with in Florida. We're doing a new construction there in St. Petersburg. That's winding down here pretty soon. But this will be my first new construction where I'm actually a lot more actively involved in some of the day to day. So that's why it's very exciting, and it's our first new construction with me and Duan in R&D Capital.
Love it. No, this is an important step. I think everyone will end up in ground up who are active in real estate one way or another. This is a path, right, for any real estate investor.
Pretty typical. Yeah.
Pretty typical path.
Yeah.
So what markets are you focusing on right now? I know you mentioned you started at Raleigh, Durham, Chapel Hill, that triangle, and then you focus on tertiary markets. So where are you right now on the map?
Yeah, so in R&D Capital, we're focused a lot on kind of submarkets east of Raleigh and Durham. So like Rocky Mount, Wilson, Goldsboro, those types of areas. So we have really good deal flow there. We do some of our own marketing. We got a cold caller, Dwan does acquisitions. We get a lot of leads from wholesalers, a good amount of leads and deals from some of our agent contacts. And really, so you were talking earlier about relationships and networking. We're finding that more and more of our best deals are coming to us from agents. So these are agents that we've worked with in the past. Either they brought us deals in the past, or we've made offers on properties they've listed in the past. And they see that we're doing it. We're able to close. We're turning these properties around. And so they see the value in bringing us deals. And look, I mean, if an agent brings us a deal, 99% chance they're going to get the listing on the back end. So we're seeing a lot more momentum.
You're nurturing that relationship, right?
For sure.
That's how you work, and it makes sense, total sense, right? If they brought you a value, you kind of give a value back, and now you have this relationship ongoing. Absolutely. And people understand and respect that. And I think it's very important to mention that to our listeners. Networking is a key of this business. It's a key principle. Just while you're on that market, what do you see right now? Do you see more sellers right now or more buyers running around buying a ready project like you doing and flipping those houses? Do you have any changes, or is it pretty much steady right now?
I would say it's pretty steady. I think that I would say it's probably more of a seller's market than a buyer's market, not by much. And so basically the way I would think about it is, for some of the more distressed properties in the markets that we're in, we're still able to get deals. Right, sellers kind of understand the value of what they have, and they're not overestimating the value of their properties, which means that we're able to negotiate prices that are fair, in the sense that the seller's getting what the market is able to give, and we're able to get deals that we're able to make work. That after we go in and renovate, we're able to sell at a reasonable profit. So, and we're seeing some competition from other flippers in our market, but not a ton. And so like this seems to be a really good balance, and we're able to get really good deal flow, right?
What kind of margins do you see on the market right now for you as a investor and a flipper? And can you run one deal that you close this year in terms of numbers?
Sure. So the one that we have under contract, well, I'd have to look up the numbers. I don't recall the exact numbers.
Sure.
We're selling it for $230. We bought it, let me think. We bought it for around 40 or 50. We put about 100,000 into it, and we're selling it for $230. So really, really healthy margins on that one. We basically rebuilt that whole house. It's a manufactured home in Princeville, very, very big, 2,800 square feet, mostly cosmetic, nothing major structural or anything. You know, we put in a new roof, new kitchen, bathrooms, flooring, paint, all the surfaces redone, cleaned up the yard. And so we're basically selling what is almost a brand new house to a first-time home buyer. Actually, we're very excited about that.
Do you find the deals from the agent?
Ooh, that's a good question. I'd have to look it up. I think one of our agents did bring that to us. I think we bought it on the market. He brought it to us. We negotiated the deal, and we closed on it. So, and that's the agent that's obviously listing it now, and he's brought us a lot of deals.
Yep. So again, relationship. And did he bring you the first deal? Do they just call you, hey, I have a new list and you might be interested? Or is it you just see them on the market and then you approach them and then you just
he brings them to us all the time. He's bringing us deals. Some of them are either off market or pocket listings. Some of them are on market. Sometimes we'll see a deal in the market that he helps us in. And so we'll send it to him and say, hey, can you help us get access? Because neither myself or my partner are agents. So we would need him to, to help us get in, get the lockbox code, all that stuff. So he provides us a lot of support. He'll run comps for us. He'll tell us his opinion on valuation. He's really good. Okay, so this is for anyone that's flipping houses. Agents, like the right agents, are really, really good at understanding the value of what you can expect to sell the house for, which that in itself is the moneymaker. Like if I can nail down, like I know what I'm buying a thing for, right? Because it's in my contract. I have a good sense of how much I'm going to spend to fix it up. Although that's something that you'll learn over time because you'll make mistakes. But once you get good at that, you can really nail down your rehab costs. But it's the selling cost, it's the selling price that's like that, not that big unknown, but the thing that if you really get that right, that's the last piece of the equation, you're going to make money. So he's really, really good at telling us how much we're going to sell for.
You have to be realistic at your projections, right?
Oh, for sure.
You don't need an agent who's going to sell you a dream and then you're going to be stuck for the piece of property for another 6 months trying to sell it and drop into price.
Yeah.
And everyone like, what is he doing here?
And I've worked with a couple of those too, a couple agents we've had to fire.
Oh boy. Yeah. So tell us, how do you find a good agent?
I don't know. You go through enough until you see the good agent. So like, you just gotta, it's no different than contractors. You got to go through a bunch until you find the good ones. So it's, you got to have a lot of tenacity and staying power in this business to really get through and make all the mistakes you need to make until you start actually making it work.
The keyword is experience. You have to get it first. You have to burn a few bridges, and then you learn what is good for you and for your team. What about construction part on your flips? Do you guys have it in-house?
No. So we work with GCs or with like individual crews and subs and things like that. And my partner manages all that. He's on the ground. He has the construction background. And so he finds and hires them out, manages them. And when you find a good contractor, especially a good GC that can take a lot of the project management off of your hands, that's like worth its weight in gold. So we have one contractor that I'm not going to tell you his name because he's mine. But he's great. Like we get him in there. He gives us an estimate. He does the work for what he says he will. Very, very rare that we come back with any change requests, because he's really good at really knowing everything that needs to be done. And we're mostly hands off. Like my partner will stop by maybe once or twice a week just to check in on things, but the work gets done. The contractor gets paid. He gets his incremental payments at the agreed upon milestones in the project. And, the work is great. The quality of the work is amazing.
And how long is the process to flip a house in your area?
It varies. So we've had houses that, like our fastest turnaround house from purchase to close was like 3.5 months. That included the rehab time in between. The rehab took a month and a half or so. That's not typical though. So more typical is anywhere between 6 to 9 months from close to close. But we've had also projects go long. I have one project. Well, we eventually closed it, but it was the very first house we bought together in North Carolina. And I think it took us 15 months to turn it around all the way. For various reasons. I mean, mistakes we made, contractors we had to turn over. There were periods of time where we kind of neglected it in favor of other projects. So we basically made every mistake in the book on that one. But typical, like the rehab timeline for like a medium size rehab, maybe 3 to 4 months is pretty much what you can expect for the rehab itself.
And you selectively just work in those particular areas. You don't look at any other projects outside. You just have enough job here, right?
For sure. Like occasionally we'll see deals that are in like a little bit further than some of the submarkets we work in. We'll still look at those if they appear to be good deals. We're looking at one that we're trying to get under contract. So it's actually in Fayetteville. It's a little bit outside our area. It's kind of south of Raleigh. It's a little bit further, certainly further for my partner to get to, a little bit further for some of my contractors, but it looks like it's got really high potential. So we're willing to take it on.
So do you have to look for a new contractor for that, or you have guys driving back and forth?
We have some guys that'll travel, but obviously like some contractors will want a little bit more for travel time. So that gets incorporated into the cost, and that goes into our rehab cost estimations.
And what advantage to have someone local and maybe simplify permitting process to go through with the city, or it doesn't matter for you?
Oh, I think it matters. And this is my preference. I would personally never do a deal where I was the sole operator or one of the sole operators, and everybody's remote. I would always want somebody that's there physically on the ground, can go see the property multiple times a week, can go into the county to talk to folks if we're having issues with permitting, knows the market, knows the neighborhoods, all that stuff. That, the value of that is incalculable.
Yep, you're just taking a calculated risk. You're just avoiding those mistakes that you've done in the past, probably on everyone else. I did it too.
Yeah,
But we learned it, and now we're trying to engage. It's part of the diligence, right? So
for sure.
you're doing your due diligence up front, and you'll see if even feasible to turn around this project. What about ongoing projects? Do you see any changes in the political world, and do you see any influence to real estate? Are you rushing to do any projects, or you just go with the flow steady and it doesn't matter for you?
It matters. We think about it a lot. My partner and I talk about it a lot. I mean, certainly this is being recorded in April 2025. Tariffs are in the news, and things are changing almost on a daily basis. Interest rates, like there's a lot of uncertainty with interest rates. Everyone's wanting them to go down just a little bit more. So we look at that stuff. It doesn't seem to be really affecting us right now. I haven't really seen any impact on our material costs or anything. So it's like something we're keeping an eye on, and considering when we're thinking about which projects to take on. So in this type of market, I would rather do smaller projects that I'm going to be able to turn quickly in case the market turns. I'm able to sell hopefully before major things change. But if we were looking at actually a potential ground up construction of townhomes in Durham that was going to take 1.5 to 2 years, and that in itself, given the current political climate, is another level of risks that we decided not to take it on. So that's how I think about it.
Overall expectations, the rates will go down eventually this year. We're expecting 2 or 3 rate cuts by other third party agencies.
Yeah.
And Bloomberg actually said it. So in the nutshell, it should have a relief, right? And if there's interest rates going down, logically we can kind of speculate that, hey, maybe there'll be more buyers because all of them waiting just the right time to go back into real estate and buy their next property. Maybe a lot of people actually waiting for that. What are your thoughts on that front?
Definitely a lot of people wait on that. I have one buddy that I know through my mastermind who's a mortgage broker who I constantly see him posting on social media about, like, what are you waiting for? Because rates have gone down from last year. And so like you can try to wait, but eventually like you're going to miss your window. So, and you can always buy now and refinance later if rates continue to go down. So, I do see buyers waiting, but at the same time, some people are buying, certainly because we're able to move our properties.
The best time to buy real estate is 10 years ago. The next best time to buy today, right?
Right. Yeah, there's another saying that I've heard, like, was it date the rate, marry the property, right? So the interest rate you're dating it, you can swap it out later, you can refi, but find the property that you want. That's what you're getting married to.
That's a good one. But yeah. I hate the idea of married to the property. We're in the business of flipping, and real estate, just getting attached to properties can actually backfire to you.
For sure.
But listen, tell me a little bit about more your structure of your operation. Do you bring outside investors to you, or you just simply operate with your own funds on this one? Oh,
no, absolutely. So a lot of basically a good chunk of our funding is not my own personal money. A good amount of it is, certainly. But we work with hard money lenders and private lenders. And so the overall deal structure that's pretty typical for me is bring in a hard money lender for about 80% of the loan to cost. So they're helping us with a good chunk of the acquisition and typically 100% of the rehab. And then I'll bring in a combination of my own capital or private money for the remainder. And so that'll include the remainder for acquisition, maybe any gap funding needed for construction, holding costs, all that stuff. And so, and what I like about that mix a lot is that I'm able to, one, give opportunities to friends, family, people in my warm network that want to invest and get really good returns while not having to raise all of it with private money. I know some investors that will use private money to fund the entire thing, which at least from my experience is a little bit more challenging, at least because most of my investors are, they're contributing anywhere between 50 to 100K into a deal. They don't have 250 to fund an entire project. So hard money, supplement with private money in my own capital. And then I'm able to, give good returns to my investors. They get a lot of updates. They get their capital, their returns back, and get a lot of repeat business.
Do you have any plans to create some fund to scale this operation?
Not at the moment. I can see us doing that later on if and when we need to scale, but at the moment it's simpler and less overhead with just doing private notes, mortgages, all that stuff instead of a fund where we're pooling money together for larger purchases or longer term.
And how does it work with your private investors? What is security net there? Are they on the, how do you price those properties? Do you buy those properties under one LLC? Is it your umbrella LLC? How do you make a safety net for your investors so they know if something going on with the property or with you, how they can get their money back?
Yeah, absolutely. Typically, not typically, but always the property is purchased under the entity that's operating in that market. So in North Carolina, it's R&D Capital. That's the LLC that's going to take title of the property. The lender, so if we're talking about a private lender, will get certainly a promissory note, which outlines the terms of the loan, right? So interest rate, duration, all that stuff, as well as a deed of trust. So North Carolina is a deed of trust state. And so what that basically does is that's a lien against the property that secures their investment. So if something were to happen to me or if I were to default, they can foreclose on the property and get their money out that way.
So basically, it's going to be a secondary note lien holder.
Correct.
Because the first position will be a lender.
That's right.
Your hard money lender. Correct. In this case. And for what kind of terms are you getting for hard money loans right now nowadays?
Hard money anywhere from 10 to 10.5% with 2 points, and that's for 12-month term with the option to extend a couple of times. That's kind of built in. That's a really good question. I don't remember. So I currently work with a company called Casa Lending. They are a sort of the successor to another company called Upright. Before that, they were called Fund That Flip. So Fund That Flip might be the brand that most people are familiar with.
Okay. And you just found them and you just roll with them. Have you tried to shop around for a better rate?
I have.
The guy with your experience already have enough experience to get the best rate possible. 1.5% is really reasonable.
Yes.
2% points. I think it could be negotiable if you can find other people, but it's also important to build a relationship with one lender and keep nurturing that relationship like with your broker. So tell us a little bit more about your operation there.
Yeah, absolutely. So I've tried a couple of different lenders. As far as hard money lenders, I've worked with Kiavi before. I personally have found that Kiavi is a lot more difficult to work with, and I've had a couple of deals I tried to do in Michigan that they initially said they could fund, and then they kind of backed out, and that caused major issues for me. There, in general, there's more red tape. They're not able to close as quickly. There's all kinds of additional hoops to jump through for Kiavi. I kind of keep them in my back pocket in case I need them. They refinanced one of my flips into a DSCR loan, so they were useful for that. But as far as flips, I kind of don't look at them. Casa has been great. They've always like closed on time. Their team is really engaged. They make things really easy. They help with the transaction coordination, so they're constantly on top of the seller's agent and even my attorney, all that stuff. They're telling me what they need. So we built a really good relationship. They're reliable. I know that they can close. I've never had them, and I'm not saying it'll never happen, like who knows, but I've never had it where they told me, hey, this deal looks good, we'll be able to close it. And them coming back and saying, actually, Ron, it doesn't meet whatever, that's never happened. So they're just a really good trusted partner. I know I can rely on them. I know what terms I'm going to get, and they are good terms. So they're just great to work with.
I think it's worth any money, right? Any additional money, any points, because in the end of the day, you get in a service. You provide you a service that help you to propel your business to the next level. Now you don't have any bottlenecks on the funding side, and you have your investment lined up, and you don't have any surprises along the way. And I think it goes along.
Yeah. So the way I would really characterize it is they give me predictability. There's so much unpredictability in this industry, in real estate in general. Deals can fall through at the last minute. The market can shift, all that kind of stuff. But that's one less thing I have to worry about is knowing whether my hard money lender is going to close when I have a 10-day closing window, and I have to buy it because the seller is going to walk away because they need their money. So that's one less thing to worry about.
What was your fastest funding spree? What was your fastest closing process?
With Casa, I think it was 14 days. Like I usually when we get properties under contract, we like to have a little bit more time. It just gives everyone breathing room. So normally I'll negotiate 21 days or 30-day close. But Casa's they've certainly closed for us in 14 days. I think they can close a little bit faster. We've just never really pushed them hard on.
Yep, I think again about communication and the seller's need is important. If seller needs to move on and to do something,
For sure.
you do what you have to do, and then that's the importance of a good team. Now you have a proven track record with the lender, so if you say, hey, I needed 10 days close instead of regular 2-3 weeks, he will go above and beyond to make it good for you.
Yeah, absolutely.
So tell us a little bit more how you find those deals. You got it. How you found this deal? How you evaluate those deals, the flipping deals? Are you in charge of that part, or you're mainly second partner who's in charge of construction, working on that front?
So my partner and I will both evaluate the deals. I'm probably a little bit more heavy on the deal analysis and just in the vetting and the risk mitigation and all that stuff. And so basically, there's a few different major components. So there's the cost of the purchase and all the purchase associated costs, which might include wholesaler assignment fees, things like that. There's the cost of the rehab, and then there is the exit price majorly. We also incorporate into our analysis the holding costs, which for longer projects will make a significant impact, but it's a smaller variable. It's a smaller factor. So we basically, I mean, I have a back of the envelope calculation that I do whenever I look at a deal. So in about 15 seconds, I can tell you whether it looks like it has potential. So, and this is just a first level analysis. Like once a deal looks good, we'll go in, we'll throw it into our calculator. We run all the numbers and make sure that we're really, really solid. But the initial calculation, I'll take my projected exit price, I'll multiply it by 88%. So the 88% accounts for my buying costs, holding costs, selling costs, okay, including realtor commission on the back end. So we could just take 12% off the top. From that, I'll subtract the purchase price and I'll subtract the rehab cost. And then what I end up with is my projected profit. Super, super high level back of the napkin calculation.
Do you have a minimum expectations for the profits you're trying to take home?
It'll depend on the market and the price point. So in North Carolina, a lot of our properties, our price point for sale is anywhere between let's call it 160 to 250,000. For those, we look to make at least 35,000 on a deal. Just table stakes. If it's less than that, we kind of don't look at it. I'm not in business to try to scrape by, and then if something goes wrong, I've wasted mine and my partner's 3 months of our time, and we break even or we lose money. We just don't want to do that. Now at higher price points, certainly there's a lot more risk. For longer hold times, there's a lot more risk. So for those, we look for more like a gross margin, or gross margin is not correct, more like a net margin of 10 to 15%, depending on the level of risk. So if I'm, my exit price is around, 600,000, I'm going to look to make at least 60K on that deal. Let's say 60 to 100K. Again, risk adjusted. So for our new construction project in Durham, for us, we see it as more risk just because we haven't done any before. I mean, the deal looks great. And the neighborhood's amazing. We have a great realtor that's going to help us sell it, who knows the market really like the back of her hand. We have a GC who's done a lot of new construction. Like, we're very, very confident in the deal. But for that, we're looking for a much higher margin to make sure that we have a safety net in case things go long or the market shifts.
Yeah, absolutely. And I think it's important to have your margins ready. And it's important to have your end goal result. You can't say yes for every property, right? You have to, like you mentioned, you can go negative or break even. What's the point of doing business then?
Yeah.
Just to do business. But you need to eat, you need to feed your families. And this is, everyone has their own why, right? But in the end of the day, it's a business and it has to bring revenue. So that's the main driver. Okay, I like it, what you said. I think it's important. Now, let's talk about future. What future holds for you and your company? You mentioned that you're trying to focus and grow your, flipping business. What about your coaching part and your other avenues? Do you have any growth on that front?
Yeah, absolutely. So some of the consulting I'm doing, I'm continuing to invest time in. There's one aspect of the consulting that's pretty steady. There's another aspect of the consulting that is a little bit more speculative or more, let's just say that the way I'm compensated is going to be based on the growth that I'm able to generate in the company that I'm consulting for. So that's on the consulting side, and that's business consulting basically. For the flipping business, that's where I think a lot of my long-term energy is going into investing in that. And so this year, like I said, we're trying to do 12 to 15 in North Carolina, with a goal of coming out of 2025 of a rate of about 3 deals per month is what we want to build up to. And so for 2026, we're going to look to do 30 to 36 properties with a gross profit of about $750,000 is kind of what we're looking to do. It's a projection. It's a goal. Like I can't say for sure that I'm going to make almost $1 million next year. Don't know, but I'll just say that I think that goal is a lot more reasonable than some of the earlier goals I had when I first got into real estate. Just given how little I knew then and how much I know now. And so that's where most of the focus is going to go, is into the North Carolina flipping.
I think it's important to shoot for the stars. Like Grant Cardone, I don't know if you read 10X. It's important to have your higher goal.
Yeah.
Then if you even don't reach that high goal, you still get, even you reach half of that amount, you still going to be much further along than you do a 2x or 3x goal. So it's important to have a higher benchmark for yourself and trust and believe in your journey.
For sure.
Yeah, it's all great. Let's talk a little bit more about mindset,
Okay.
right? We talked about how you transitioned from your military to your corporate, and then you're not advising it to anyone, but you jump right into real estate. I know that you started reading this 4-Hour Workweek by Tim Ferriss. You're a big believer in personal development. What kind of habits did you develop for yourself to stay on your path of progress along the journey?
I would say, I mean, there's lots of habits. One is like really, really strict time management, right? And so utilizing tools like time blocking, daily, weekly, quarterly planning, all that stuff. So basically taking your overall goals, breaking them down into individual steps and weekly actions, and then making sure that those end up on the calendar. Right. Because for me, if it's not on the calendar, it doesn't exist. Like it's just not going to happen, So without that, I'm kind of lost. What other habits? I mean, like a good fitness routine for sure helps. It's something I wish I had adopted earlier in like my corporate career, because it could have helped me progress a lot faster, I think, with its impact on energy, concentration, focus, mental health, drive, all those things. So having a really good fitness routine, and everybody's going to be different. So I do some strength training. I do a lot of hiking. Things like that. It's just I enjoy being in the outdoors. And then I wouldn't say this is a habit so much as like a practice, but just tenacity. Just whenever you get punched in the face, just getting back up and getting ready for the next one, and trying to find solutions and get better, learn from the mistakes, but just not giving up. And so there were a few times along the journey where I felt like I wanted to give up, for sure, especially that first year, and some in the second year too. I saw a lot of obstacles, but just working through that stuff, consulting with peers and coaches, and getting my mind right, and just getting back at it and figuring out what's next.
I love it. So tell us now, how has real estate investing shaped your lifestyle? How do you balance your real estate investing and your family and your fitness and even your outdoor activities?
Yeah, I think it kind of goes back to planning and time management. So what I did at the beginning of this year is I kind of mapped out what I wanted my year to look like. So I took a few hours out of my day and just wrote down my vision of how I want things to look by the end of 2025. And that's along, personal life, family, business, fitness, wilderness survival, all that stuff. And so I kind of wrote it out in really vivid detail. There's a really good book I can recommend and have recommended to coaching student called Vivid Vision. And that's around really just getting really clear on what you want to build. And so once I had that written down, the goals of what I needed to achieve during the year, just naturally fell out of that. And so then I extracted that into goals and milestones and all that stuff. And I kind of have it mapped out for the whole year, including like when I'm going to do wilderness survival. So I like to go on, like last year, for the first time, I went on a solo up in the Catskill Mountains in New York for 3 days, just kind of on my own. And so this year I have 3 planned, because, I didn't like everything how it went down last year. And so, next level of detail and planning that I'm going to incorporate into this year. And we can get into that. But it really just about getting systematized around planning and making sure that everything fits. And then it's just about like going with the flow a little bit, right? Not being so rigid that it's like, oh, if this one thing didn't get done today, like it ruins my day or my week. It's like, okay, it didn't work. Let me see what I can adjust. Let's see what I can move around, and just giving myself some grace. Like, you don't have to be perfect. You just do your best.
But it's also having a path, right?
Oh yeah,
You having your vision where you want to come, where is your goal.
yeah.
If you go to wilderness and you don't have a path where to walk from, you can get lost.
You're
You're not
gonna
going to
die.
get to the end point.
You're gonna,
You can die, right?
yeah,
But if you have a vision, okay, I need to go from A to B, and I have kind of understand that there is a path that I can walk, and you don't know where the path's gonna go, right? You don't know where is the turn gonna be, left or right.
right.
But in the end of the day, you will come to the end point because you're following the path that you already mapped out. And the same, it's like we can translate to other avenues of our life.
For sure.
And I like how you did annual journaling. I do this annually goals as well with my wife, and I'm doing an extra step nowadays. I started a daily 5-minute journal, and I think it helps to gather my thoughts in the morning and in the evening, and what did I achieve, what I accomplished, and how we can progress next day. Okay, I'm gonna do better next day. So let's push it through.
It's awesome. Love it.
So Ron, tell us about financial freedom a little bit. Now you don't work corporate, you in real estate, and you have this lifestyle that you built for yourself. Is this a financial freedom that you were dreaming about, or do you have a big inspiration beyond the numbers in your bank? What is this for you?
It's a good question. I think my thinking on this has evolved and will continue to evolve. Part of me thinks that this notion of financial freedom is a bit of a myth, in the sense of like what's the goal? So I'm going to have enough money in my bank account one day to not have to work? Like, and am I comfortable with that? Like, do I want to really not work? Like, I enjoy my work. I like real estate as much as painful as it can be. I like coaching. I like consulting. I like doing all these things. Like what am I trying to achieve? Did not have to do it. So, I think for me, more important is the freedom of time and flexibility. And I've basically, you can say I've achieved that. I'm able to get on this podcast with you right now in the middle of the day and not have to worry about like, oh, I have to report into my boss or take a half day off to do that. I'm able to travel. Last week, my family and I traveled down to Maryland to spend some time with friends where, look, I took my laptop with me. I worked several hours each day, but I was able to, in the afternoons, like spend time with them, go out to eat, go out to restaurants and be with the family too. So I think for me, it's around having the freedom of the flexibility to control my schedule. That's ultimately the biggest unlock for me.
Yep. I think it's the biggest flex of nowadays of people, right? That you don't have to go to work. It's not about flashy scenes. It's about cars or Rolexes or anything else. In the end of the day, it's a time that you get in to spend with your family and to be on your own terms. You don't have to stick to some schedule of employer. Okay. I know we are tight on our timeline. I have quick hits, lightning round for you. So whatever first comes to your mind, just spit it out and we're going to move on to the next stage. Okay. One book or resource that made a major impact on your real estate mindset, besides 4-Hour Workweek.
Yeah. So even before 4-Hour Workweek, there was Set for Life.
Very good. I haven't read. Do you know who is the author of it?
Not off the top of my head.
I will find it and I'll put it
Highly
on the
recommend.
screen. So we will have it. Absolutely. Most important trait for a new investor to build?
Discernment. So just asking more and more questions and understanding the full problem space before making a decision.
I'll go a step further. Don't shy to ask questions, because a lot of people are like, oh, I'm not experienced, and this guy is kind of intimidated because he's so professional and experienced, and I will look stupid asking this question. No,
100%.
Always ask your question. Always be there, and there's no stupid question in the business or anything else. It's your journey, it's your money, it's your life.
For sure.
Moving on, one thing you wish you knew early on your journey.
Ooh, that's a good one. I can do this.
Very strong statement. I like it. I think it's important to realize that sky's the limit. Earlier you realize it, and really the sky is the limit. Okay, final question. If someone wants to find you and connect with you about coaching or about your real estate investment, about your flipping business, how people can reach you?
Absolutely. The easiest place to find me is my website, ronangel.com. I've made sure I'm the #1 hit when you Google for Ron Angel. I'd have my SEO.
Perfect.
Super easy to find.
Love it. Okay. And it has all the contact forms there
Yeah,
that
I got
people
it.
can
Got links to my
get in touch with
socials,
you.
all that stuff.
Awesome. Ron, that's it from me. I really appreciate you coming
My
out and
pleasure.
sharing your journey from military going to corporate and again going full-time real estate, jumping from the hill, building your parachute down the way and making it happen. You're true inspiration and I commend you for that. Thank you.
Thanks, Alex. Appreciate it.
Of course. And to everyone tuning in, thank you for listening. Don't forget to like, subscribe, and as always, keep moving forward. Thank you, guys.